Hello, traders, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an Forex analyst, I'm also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. The first one is the official cash rate in New Zealand, NZD/USD. The second one is the German final CPI, month over month in Europe. And we're going to focus on euro dollar currency pair. So let's start with the first one. Official cash rate in New Zealand, NZD/USD currency pair. Date and time was July 8th, 2 p.m. UTC time. Now, what is official cash rate in New Zealand? The official cash rate, also known as OCR, is the benchmark interest rate set by the Reserve Bank of New Zealand. It is one of the most important events for the New Zealand dollar. The OCR affects borrowing costs, inflation, consumer spending, and economic growth. It also shapes expectations for future monetary policy. A higher than expected interest rate or a hawkish policy outlook usually strengthens the New Zealand dollar and pushes New Zealand dollar higher. A lower rate or a dovish outlook often weakens the New Zealand dollar and sends NZD USD to the downside. So the official cash rate is the benchmark interest rate set by the Reserve Bank of New Zealand. It is the Reserve Bank of New Zealand main tool for controlling inflation and supporting economic stability. Higher interest rates help reduce inflation by slowing borrowing and spending. Lower interest rate encourage borrowing, investment, and economic growth. Currency traders also pay close attention to the Reserve Bank of New Zealand policy statement because it provides guidance on future interest rate decisions. Now, the previous number we got was 2.25, forecast was 2.50, and the actual interest rate number we got is also 2.50. So this number is actually greater 2.50 than the previous 2.25. The official cash rate was increased to 2.50, matching market expectations and rising from the previous 2.25 number. Despite the rate decision matching forecast, NZD USD moved higher following the announcement. Let me show you the price chart of NZD USD currency pair. So we go over here. This is the price chart of NZD USD currency pair. And after the news announcement, the price action of NZD USD moved higher. And as of today, even as of today, it's going up. The upward move suggested that investors viewed the policy stance as supportive for the New Zealand dollar, while broader US dollar weakness also helped lift NZD USD currency pair. Now, why NZD USD currency pair moved up? Well, there are several reasons. The official cash rate increased to 2.50%, matching market expectations. Okay. The rate hike confirmed continued monetary policy tightening compared with the previous reading. The Reserve Bank of New Zealand maintained a supportive policy outlook for the New Zealand dollar. Broad US dollar weakness provided additional support for NZD USD currency pair. Positive market sentiment encouraged demand for higher yielding currencies. So, currency traders could focus on the overall policy outlook. The combination of these factors created bullish momentum in NZD USD currency pair following the announcement. The key market drivers observed is the official cash rate, actual 2.5 versus the forecast 2.5 as expected. Interest rate increased from the previous reading of 2.25. Reserve Bank of New Zealand policy outlook remains supportive. Broad US dollar weakness across the forex market. Positive global risk sentiment. Overall market expectations favored the New Zealand dollar. The technical and sentiment considerations. The interest rate increases confirm the interest rate increase confirm the Reserve Bank of New Zealand tighter monetary policy stance, which generally supports the New Zealand dollar. Although the decision matched expectations, currency markets reacted positively to the overall policy outlook and broader market sentiment. Following the initial reaction, traders continued to monitor future Reserve Bank of New Zealand guidance, inflation data, US economic releases, and global risk sentiment for confirmation of the broader trend. Now, as far as the market outlook is concerned, the short-term bias is obviously bullish in NZD USD currency pair. We might get a drop in market and then further rise back up in NZD USD currency pair. That's also looks a bit possible. I will do a more detailed analysis at the end of this webinar. So first cover the fundamental side. So overall analysis is the Reserve Bank of New Zealand raised the official cash rate to 2.5%, matching market expectations and increasing it from the previous 2.25 number. Although the decision itself was widely anticipated, NZD USD moved higher after the announcement as traders responded positively to the Reserve Bank of New Zealand policy outlook and broader US dollar weakness. The financial data release demonstrated that overall market sentiment and central bank guidance remained the primary drivers of short-term and the USD price action. The final key takeaway is the previous reading was 2.25%, forecast 2.5%, and the actual number is also 2.5%. The Reserve Bank of New Zealand raised the official cash rate to 2.5%, matching market expectations. Despite the expected decision, NZD USD moved higher as the Reserve Bank of New Zealand supportive policy outlook, broader US dollar weakness, and positive market sentiment created a bullish short-term environment for the currency pair. Next one is the German final CPI month over month in Europe, and we're going to focus on the euro dollar currency pair. Now, let me first explain what is German final CPI month over month in Europe. The German final CPI month over month measures the change in consumer prices in Germany. It provides the final confirmation of inflation after the preliminary estimate. Germany is the largest economy in the euro area. As a result, this report has a strong influence on the euro and European Central Bank policy expectations. A higher than expected reading usually strengthens the euro and pushes euro USD higher. A lower reading may weaken the euro and send euro USD lower. Now, the event details. The German final CPI month over month in Europe. The previous number was minus 0.3%. Forecast is also minus 0.3%, and the actual number we got is also minus 0.3%. Now, let me discuss market context and pre release expectations. Forex markets expected German final CPI to remain at minus 0.3%, matching the preliminary estimate. An unchanged reading was expected to confirm that inflation trends remained stable. Currency traders closely monitored the report for any revision as changes could influence expectations for future ECB monetary policy. A higher reading was expected to support the euro, while a lower reading was expected to weigh on the currency. Now, the market reaction. If we take a look at a price chart of euro dollar currency pair, euro dollar actually kind of going a bit sideways at the moment. The German final CPI came in at minus 0.3%, exactly matching both the market forecast and the previous reading. Despite the inflation data meeting expectations, the price action of Euro USD moved lower following the release as broader market forces favored the US dollar over the euro. So on July 10th at 6 a.m. UTC time, we got the news announcement, which is right over here. So this is where the euro dollar showed a nice drop in price action. Price even showed a gap first, but it actually filled that gap. Let me go over to the 4 hour. This was the gap. Price opened with a gap, then it filled the gap, and then dropped back down again. So the bearish price action suggested that the traders focused more on stronger US dollar sentiment and broader macroeconomic developments than on the unchanged German inflation data. Now, why Euro USD moved down? Well, there are several factors contributed to the bearish move in Euro USD. For example, a German final CPI matched market expectations and provided no positive surprise for the euro. The unchanged inflation reading offered little reason to change ECB policy expectations. Broad US dollar strength pressured euro dollar lower. Currency traders focused on wider macroeconomic developments rather than the inflation report alone. Market positioning favored buying the US dollar, and external market factors outweighed the neutral German inflation data. The combination of these factors created bearish momentum in Euro USD despite the inflation report matching the expectations. The key market drivers observed is the German final CPI actual minus 0.3% versus the forecast of minus 0.3%. So as expected, we got the same number, and the previous reading was the same as well. The inflation unchanged from the previous reading. Stable inflation outlook in Germany also was a driver. Broader US dollar strength across the forex market actually pushed the euro USD to the downside. So market focus shifted to broader macroeconomic developments. As far as the technical and sentiment considerations, the unchanged inflation report confirmed that German price pressures remained in line with expectations, offering no new signal for ECB monetary policy. However, currency markets often react more strongly to broader market sentiment than to an economic report that matches expectations. In this case, US dollar strength became the dominant driver of price action. Following the initial reaction, traders continued to monitor ECB communications, US economic data, treasury yields, and overall market sentiment for confirmation of the broader trend. as far as the trading outlook is concerned, the short-term bias is somewhat bearish in euro dollar currency pair. So we might get a short-term bullish rally um, in euro dollar currency pair, but overall the trend is still down. And here's a weekly time frame. We got this trend line break. I will discuss it more in detail later. Although the German final CPI matched market expectations, broader market conditions favored continued weakness in euro dollar currency pair. If US dollar strength persists and ECB policy expectations remain unchanged, Euro USD could continue to trade lower. However, Forex traders should continue monitoring upcoming Eurozone economic releases, ECB communication, US economic data, and overall market sentiment for additional direction. The overall analysis is the Germany's final CPI remained unchanged at minus 0.3%, matching both market expectations and the previous reading. The inflation data confirmed stable price trends but did not provide any new support for the euro. Euro USD moved lower after the news release as broader US dollar strength and overall market sentiment outweighed the neutral inflation report. The Forex news release highlighted that wider macroeconomic conditions remain the dominant driver of short-term Euro USD price action. The final key takeaway is the Germany's final CPI matched market expectations, confirming stable inflation and providing no new signal for ECB policy. Despite the neutral economic data, Euro USD moved lower as broad US dollar strength and overall market sentiment outweighed the inflation report, creating a bearish short-term environment for the currency pair. Now, let us take a look at previous week global market trends. I'm going to discuss the Euro USD and USD Swiss franc currency pair. Let's start with the euro dollar first. So here's a weekly time frame. We got this break down over here in price of euro dollar currency pair. Regarding the daily time frame, if I zoom out a little bit, this is what we easily notice. Let me draw a simple trend line. So this is the daily time frame of euro dollar currency pair. And as far as the price action over here, you can see that market is staying below this downward sloping trend line. So this looks like to me kind of a bearish downtrend going on in euro dollar currency. Market might try to retest this trend line and then goes back down, or just go sideways and then drop further. Next one is the US dollar Swiss franc currency pair. Here's the weekly time frame. We got this bullish breakout in weekly chart. Inside daily time frame of USD Swiss franc currency pair, the price action is turning a little bit, I would say, sideways to bullish. So we might get a drop in price action of USD Swiss franc currency pair, but the overall trend is still up. So trend is up over here. Maybe on a short-term basis, USD Swiss franc is, is kind of trying to drop over here. So we might get a decline in USD Swiss franc, but the overall trend is still up in 4-hour time frame of US dollar versus Swiss franc currency pair. Now, let me talk about current week's macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. So these are basically the upcoming important news events. Okay. Let's start with the first one, core CPI month over month in USA. Second one is the GDP month over month in United Kingdom. Okay, so the first one, core PPI, Now, what is core PPI? Core PPI stands for Core Producer Price Index. So PPI means Producer Price Index, and M over M means month over month. So core PPI measures the month over month change in prices that US producers receive for goods and services, excluding the volatile food and energy sectors. It is an important indicator of underlying inflation in the United States. The report helps traders assess inflation trends before they reach consumers. A higher than expected reading suggests stronger inflationary pressure. This can strengthen the US dollar and push Euro USD lower. A lower than expected reading may weaken the dollar and lift Euro USD higher. So the PPI measures the monthly change in prices received by the US producers for goods and services, excluding food and energy. It is published by the US Bureau of Labor Statistics. Core PPI is a leading indicator of inflation because higher producer costs may later be passed on to the end user or the consumer. The Federal Reserve closely monitors this report when making interest rate decisions. Now, the market context and pre release expectations. Well, we will get this news on July 15th, tomorrow. Sorry for the disconnection. Let me see. Do you guys manage to hear my voice? You can write the yes inside the chat box. Anybody? If you could hear my voice fine, just type inside the chat box yes. Okay. So I was discussing the core PPI. Thank you for the confirmation. Now, let me discuss the market context and pre-release expectations. Well, we are going to get this news announcement on July 15th at 12:30 p.m. UTC time. So basically, these are the upcoming news events. The market expects core PPI to rise by 0.3%, slightly below the previous reading of 0.4%. This forecast suggests producer inflation may be easing. Currency traders will watch whether inflation continues to slow or remains elevated. A reading above 0.3 could strengthen the US dollar. A weaker reading could put pressure on the US dollar. Now, why Euro USD could move? Well, let's take a look at a price chart of Euro dollar currency pair. You can see Euro USD is kind of firing up over here. Okay, it kind of moved up here. The Euro USD could move because there are key drivers for potential price action, and that includes core PPI result versus the forecast, US inflation outlook, Federal Reserve interest rate expectations, US dollar strength or weakness, treasury yield movements, overall market sentiment, Eurozone economic data. Producer inflation often influences expectations for future consumer inflation. As far as the technical and sentiment considerations, Euro USD could experience high volatility around the news release time. A stronger than expected core PPI may increase expectations for tighter Federal Reserve policy. This could push Euro USD lower. A weaker than expected reading may increase expectations for easier monetary policy. This could support the Euro USD. Currency traders should also monitor treasury yields and comments for Federal Reserve expectations. As far as the trading outlook is concerned, the short term bias is neutral. I will discuss more in detail when we do the technical analysis in few minutes time. So the final key takeaway is the euro dollar traders will closely watch the US core PPI report for fresh clues about inflation and future Federal Reserve policy. A higher than expected reading could strengthen the US dollar and push euro USD lower. A weaker reading could weaken the dollar and support the euro dollar currency pair. The next important upcoming news announcement related to currencies is the GDP MOM. MOM means month over month in United Kingdom, and we're going to focus on the GBP USD currency pair. The GDP month over month measures the month over month change in the total value of goods and services produced in the United Kingdom. It is one of the most important indicators of economic growth. The report reflects the overall health of the UK economy. A higher than expected reading signals stronger economic activity. This can strengthen the British pound and push the USD higher. A lower than expected reading may weaken the pound and send the GBP USD lower. Now, if we take a look at a price chart of GBP USD currency pair, the price action of GBP is actually kind of going up over here in 4 hour time frame. In daily, it shows somewhat, I would say, bullish price action over here. If we get a breakdown, then it might go down a little bit further. Now, the GDP month over month. The GDP month over month measures the monthly change in total value of goods and services produced in the United Kingdom. It is published by the UK Office of National Statistics. So, GDP is the broadest measure of economic activity in the United Kingdom. Strong economic growth usually supports the British pound. Weak growth may increase expectations for lower interest rates. The Bank of England closely monitors GDP financial data report when making monetary policy decisions. Now, let me discuss market context and pre release expectations. Markets expect GDP to increase by 0.1% after declining 0.1% in the previous month. The expected improvement suggests the UK economy may be recovering. Forex traders will look for signs of stronger business activity and consumer demand. A reading above 0.1% could strengthen the British pound. A weaker reading could pressure the British pound. Now, why GBP/USD could move? Well, there are key drivers for potential price action, and that includes GDP result versus forecast, UK economic growth outlook, Bank of England interest rate expectations, British pound strength or weakness, US dollar strength or weakness, market sentiment, and other UK economic data. GDP is one of the most influential reports for the British pound. As far as the technical and sentiment considerations, we might get a volatile price action inside GBP USD currency pair, especially in smaller time frame. Like we got this spike over here. Okay, short-term bias is somewhat neutral in GBP USD currency pair. We might get a sideways price action, and GBP might go down over here. The overall analysis is the GDP financial data report is one of the most important indicators of the UK economy. Markets expect economic growth to improve to 0.1% after the previous minus 0.1% reading. The previous reading was minus 0.1%. Forecast is 0.1%. The actual data not yet released, but it is going to be released on July 16th at 6 a.m. UTC time. The final key takeaway is the GDP traders will closely watch the UK GDP report for fresh clues about economic growth and future Bank of England policy. A stronger than expected reading could strengthen the British pound and push GBP USD higher. A weaker reading could weaken the British pound and send GBP USD to the downside. Now, let me take a look at current week's Forex market trends. I'm going to discuss the Euro dollar and GBP USD currency pair. Let's start with the Euro dollar first. So this is the weekly time frame of euro dollar currency pair. We got this breakdown and market is actually kind of testing this previous old swing low, also known as the support area. Okay. And if we go over to a daily time frame, as of today, the Euro USD is trying to rise up over here, but we keep getting these spikes over here. This is the daily time frame, so showing some signs of selling pressure right up over here. So we might get some sort of a sideways price action in euro dollar currency pair. The resistance is right up there, so price might try to test the resistance level first, and then it's probably going to start the decline. That's also possible. Regarding the GBP USD currency pair, the pound dollar weekly time frame market is currently finding support at this bullish trend line. If we go over to the daily time frame, market is trying to bounce back up over here. So we might get some sort of, I would say, more bullish price action first before the GBP USD is actually going to fall back down. So it's possible that, let's go to a short term. It's possible that GBP is going to drop like this and then expect a new rally. Okay. So expect a bearish drop in price action first, and then we might get further upside in pound dollar currency pair. Next one is the USD CAD currency pair. Let's take a look at US dollar CAD currency pair. USD CAD is falling down. And the way market is falling down, we're getting this big body candlestick. The support is somewhere down over here. Okay. So we will see how the market is going to react once it hit that particular support area. Next one is the spot gold. Spot gold trend is up. If we take a look at this daily time frame, weekly the trend is up. Daily it's a downtrend, and market is overall sloping downwards. On a short-term basis, we might get, I would say, some sort of a bullish price action first, and then maybe a decline. So inside XAU USD spot gold, I expect kind of a short-term bullish pullback first, and then market is probably going to resume the downtrend. The trend is clearly bearish in daily time frame. This is the daily chart of spot gold over here. Okay. So here's the 4-hour. Wait for a bullish pullback, and then expect further weakness in price action. I will take a few minutes now for questions and comments. And if you have any questions or comments, feel free to type inside the chat box related to today's Forex trading webinar. And I will be happy to answer your questions. Okay. As far as the NZD USD currency pair and the New Zealand dollar versus United States dollar, it is not considered a major Forex pair. The major forex pair is, as far as the question is concerned, it's not uh, the euro dollar, the British pound versus US dollar. Like here's the chart of euro USD. The euro USD, it's a major forex pair. Same goes with the GBP USD currency pair, and you might even include the USD JPY and US dollar Swiss franc currency pair as well. So these forex pairs, they are basically major forex pairs. So let us review what we have learned today. Well, we discussed about the core PPI in USA and the GDP for the United Kingdom, and I also discussed the upcoming future price direction for the euro dollar, JPUSD, USD CAD, and spot gold. So these are the assets to watch out for profits. What you should do next: stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you want to learn more about forex trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for staying with us. See you at the next trading webinar on Tuesday, July 21st, 2026, 12 p.m. UTC at the same time. That's all from my side for now. Have a great day and goodbye.